Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is September 14th, and we're looking at Brent crude oil trading firmly in the 90s now. Every day seems to be climbing a little bit. This morning in Asia, we see it up 0.5% at 92.34. So clearly the momentum is underway. Let's kick off with one of the biggest importing oil countries in the world, Narendra Taneja, India's leading energy expert. Narendra, at these prices, at this tightness of the market, is India concerned?
No, absolutely. I mean, first of all, is it really the market? Market means where the economic fundamentals, demand and supply fundamentals are allowed to be in play, and they basically determine the price. But is that the case? That is not the case. The fact is that, the OPEC and Saudi Arabia and some other friends, OPEC Plus and all that, they've got together and they've decided basically to artificially push the prices up by cutting production. And so it's a very old-fashioned way of actually, playing in the market, because these are politicians playing. These states are playing, and their respective energy ministers. Market has nothing to do with it. Companies have nothing to do with this. So economics has nothing to do with it. It's just politics and greed. I mean, they got to understand one thing. I mean, just because you need money, I mean, you're telling the world you need $90 per barrel because you've got this vision 2030, vision 2035, or whatever, and all that, fine, great. But then play in the market. Why do you expect poor consumers across the world, in a village in Indonesia, a village in Bangladesh, a village in India, or a village in Africa somewhere, to subsidize your dreams? Why should they do it? I mean, yes, of course, every country is not blessed with as much as oil as you are, but does it mean that you do what you're trying to do? I mean, we live in 2023. We are not in the 17th century, but the kind of politics that's being played and the kind of strategy that's being followed, it reminds me of like 15th century or 16th century, or Vasco da Gama and Columbus days. Is that the modern world? I mean, the fact is, if other countries start, doing the same in terms of what they produce, then imagine what will happen to the global economic order. So I think we understand they need more money. We respect that, but at the same time, they got to understand the entire world is passing through a very difficult time. Whether you're a rich country or a poor country or emerging economy and all that, look at China, look at the United States, look at economies like India. They got to understand. I mean, they got to understand, because if they keep on doing this, the result would be big economies, at least big players like India. We will have to, public opinion is going to tell the politicians, hey, forget about oil. We invest everything in renewables. So is that the kind of scenario they want? And today it may look like, okay, renewables can't replace oil. But look, if we all put in our efforts, India, China, Japan, United States, and we all put our efforts and invest more in technology, that will happen faster than they are prepared for. So I think greed has to come to an end. It has to be a kind of middle path. Yes, we understand they need more money, but at the same time, they got to understand economies like India, economies like the United States, they need to kind of recover fast. And moreover, don't forget that both India, out of the three major importers, US is already into the election mode. Chinese economy is not doing very well. India is also in the election mode. How do you go and explain to your people that oil is in 90s? How President Biden is going to explain to the people, or Indian Prime Minister is going to explain to the people? So we got to understand, oil is a political commodity. So let economics play some role, and your greed at the same time, or whatever you want to call it by any name, has to kind of, apply some brake to manage, follow the middle path.
Let's go to Walter Simpson, Managing Director at CCED in Oman, an independent oil operator there. Not that, Walter, you're a representative of the vast empire of OPEC Plus, but nonetheless, you are at the end of a long piece of string. But as part of the industry, Walter, and just sort of taking up the devil's advocate position here with Narendra's points, the price in which one needs to continue and to ensure future supply are at these levels. Without these levels, investment won't come and we won't get future supply. Your thoughts on addressing some of the concerns that Narendra has made, and what industry would respond to that?
So thank you, Sean, and good morning, everybody. Look, oil's always been a strategic resource, and with strategic resources, of course, politics play a part in it. But equally so, that stability and a higher price is what attracts investment. And yeah, the 90 to 95 is maybe a little bit on the high side, but you need to have the oil prices up above the 80s for that solid investment in supply. And that's what's really going to drive the price going forward. Without that investment in this year and next year and the coming years, then the commodity gets rarer and rarer and the price goes up. So actually, these prices, while it may feel as though poor people around the world are being hit by this and cost of living crisis is going up, actually to keep the supply of energy coming, you need prices at this sort of level to keep that investment coming in. So it's a bit of a chicken and egg one, and it's not a straightforward answer, but you've got to keep that supply coming and you've got to keep that investment in the industry.
Laurie Hatayan, MENA Director, Natural Resource Governance Institute in Belgium. Always strange to say Laurie's in Belgium. Still haven't quite got used to that. I hope you had a good summer. Laurie, where is all the geopolitics in this? Narendra punctuates the politics of it, but sure, I mean, politics and / greed on one level, but ultimately, this is a pursuit of income. Where is the geopolitics in this wider decision making? Is it a Russian-Saudi alliance against others? I mean, or is it all for one for all and all for one?
It is that we are all connected, and everyone now in this transitional political period, everyone is trying to benefit and find a role for itself. Because you say Russian and Saudi, but at the same time at G20, we saw that there is a new economic corridor between India, the Gulf, mainly Saudi Arabia and the UAE, Jordan, Israel, and Europe. So and then even like MBS shaking hands with Biden, in contrast to what happened months ago when there was this whole hype around will Biden shake the hands of MBS or the fist bump or whatever. So you see today that there is a transition that is happening in the world economy, and connectivity is key. And whoever is driving it, the West, or China, or both, there are like the regional forces in the Middle East and Asia are playing an important role. So I think today, definitely Saudi Arabia has a clear objective of remaining and surviving in the future, whatever the situation with oil and gas is. And this is what they're doing. And they're saying, like, at least we're making a lot of money with like and with like bigger spare capacity now, because we're not just like pumping and selling with low prices, but we're keeping them.
Are we seeing
there is tightness in market and supplies, we are ready to pump in? So it's a win-win for the Saudis. The Russians, it's completely different issue, but for the Saudis, it's win-win, and they're doing that, and they're working with China, they're working with India, and they're working with Europe, and they're working with the US. So that's the new Saudi Arabia.
Narendra, maybe address that, because since we've had you on last, obviously the summer break is lots has happened. The BRICS have extended to include Saudi Arabia, UAE, other countries in this region. India, of course, a central figure in the BRICS. And we've also had, as Laurie mentioned, this deal with G20 being hosted in India, the new sort of trade corridor from India through the Middle East to Europe. How do all of these things coexist? I mean, the BRICS now have two of the world's biggest oil exports, Russia and Saudi, and two of the world's two biggest oil importers, India and China. Are these all parallel corridors, or do they intersect at some point? You're talking there about your colleagues within the BRICS. Will the BRICS serve to answer some of the questions you raised in your earlier comment?
Well, you see, we're very happy that, United Arab Emirates and Saudi Arabia, they are part of the BRICS now. Of course, you have got some two major producers, important producer, and you've got the two important consumers. So that's kind of become a platform where the consumers and producers can interact. In fact, Saudi Crown Prince was in Delhi, not only to participate in G20, he was also on a bilateral visit. And this issue was raised. and he said that, you know, they're going to look into it, you know, to basically stabilize price, you know, at a kind of level which provides the kind of comfort that big importers like India are looking for. So this is welcome move. I mean, the sense that, you know, it's a very good platform. At the same time, G20, I mean, is a very important platform, and Saudis play a very important role in that. Saudis and India actually work together to make sure that, you know, the G20 at the summit level was not targeting oil, that oil must kind of disappear. So, I mean, they prevented that. Otherwise, that would have been probably in the final declaration. But India and Saudi Arabia, they work together and stop that. So, at the same time, building corridors between India and Saudi Arabia and going right up to the Mediterranean, and so that's a fantastic development. That means that India now has got, you know, kind of more heft, and at the same time, you know, a kind of platform, instant platform ready now where these issues can be raised. And that's precisely the point I was trying to drive home, to say that suddenly prices have gone to the 90s because the producers need to invest more in upstream. I mean, there is an element of truth in it, but it's not all truth. How come that this started happening suddenly? It's not for that. And we follow the bottom lines of all the major you know, oil producing companies, Saudi Aramco and Kuwait Petroleum, all these companies, we follow the bottom line, how much money they're making. We are also following the you know, where the money is actually going, how much money is being invested in exploration production worldwide. We follow that. That is not the case. We have also seen credible reports saying there is no shortage of money in term, you know, for investment in E&P, new explorations particular. So that is already happening. So it's not that there is any shortage. You don't need to push the prices up for that. That's just an excuse. Point here is that, you know, now that Saudi Arabia is the situation is changed. Saudi Arabia was earlier perceived to be very, very close to the US, and so US could exercise that kind of pressure. That's no longer the case. And we are happy about it. But then they have good relations with India. And don't forget, only some
can India exercise that kind of I don't call it pressure, but that kind of sort of guidance or request? I mean, does the BRICS the expanded BRICS, would India expect that it would allow and would cater for that kind of conversation that you know, like in the past, the US may have picked up the phone to Riyadh? Can India now, will the BRICS will that expanded BRICS give a platform for greater dialogue around these kind of energy policies?
Very good question. You see, first of all, there is no question of exercising pressure. Countries like India, we only, you know, Saudi Arabia is a friend. So we talk with a friend. There is no question of, you know, pressure. That's not our culture. But the point here is that when you look at BRICS, with Saudi Arabia, UAE, and Argentina, and other countries joining, now look at the economic size of BRICS on PPP basis. It's bigger than G7. BRICS today, from the 1st of January.
But it's only relevant if it can cooperate, isn't it? I mean, the G7 works because they align policy and strategy and et cetera. Can the BRICS align policy and strategies in the way that you've just articulated, let's say around energy policy?
Well, good question. The point here is that, you know, G7 has been around for a very long time, and they're more like-minded countries. They even look the same, all the countries of G7. While, you know, here, you know, BRICS is basically spanning around 3 continents, and it's a rather young organization, but it's gaining strength. And idea is to kind of basically, you know, to make BRICS a kind of platform which can represent the economic interest of the entire global South. That is the strategy. And India is, of course, going to play a very, very important role. India is not like China, which will use BRICS for whatever entire West or entire America now, because we are very close to the West. We are very close to America. We are also very close to Russia at the same time. So for us, BRICS is a very important platform, but at the same time, each country is going to take care of its interest. In terms of energy, I personally feel that BRICS is going to emerge as probably the most important global platform on oil, gas, and coal.
Interesting. Walter, with this oil price now, obviously elevating, it has been since the low of Brent in June, mid-June, we saw low 70s. It's up about 30% over the course of the last 3 months. Do you see anything out there that stops that from continuing, that growth, that or that elevation of the price? where the IEA telling us this week that in the fourth quarter, demand will exceed supply by about 1.5 million barrels of oil. So a lot of tightness in the market. Do you see anything out there that stops this trend line that we're 3 months into?
The very quick answer to that is no, I don't. I mean, there are a lot of risks to it, and there are a lot of things that could happen, but I'm not sure they're going to change the trend line. I do believe we're sitting at the, ending the year somewhere in the 90s for the oil price and going into next year at that sort of levels. Yes, China's economic performance is going to be a factor. What happens with inflation in the West is going to be a factor. What happens with the Ukraine war is going to be a factor. The natural disasters we've had just recently are a factor. But actually, I think the trend is heading to keeping the prices up, and that a supply-demand balance being in the favour of demand being slightly above supply. So I do think that's going to continue, is my expectation.
And where does the industry grow with this this sort of not windfall, but ultimately elevated revenues 2 years in a row? Are we seeing this sort of opportunity and need for new capacity? Are we seeing that investment taking place?
So I can only speak for myself on that one, and the answer to that is yes. We are definitely reinvesting that money into further exploration and expansion. So yes, I think the industry does use it for that, and it's got to. We are going to see, decline rates in oil fields are high, and unless you keep investing, that supply declines quickly. So yes, we've got to keep investing.
Laurie, let's talk a little bit about, again, since we've seen you last, where is the geopolitics in the Middle East? I mean, there's parallel corridor. Obviously, the oil price and oil policy is in its own sort of treadmill, but over the course of the last few months, this week, we've had the news emerging of this deal between the US and Iran over the prisoner swap and the $6 billion release. We've had talk of the grand security bargain between Israel, Saudi, and the US. We had news today of a Bahrain security agreement with the US. Where is it all connected? If you might just give us your own sort of update of what you think the picture and the outlook for all of these parallel tracks are looking like.
So basically, as you said, we had the biggest story was the Israel-Saudi rapprochement, or whatever track, or whatever.
Does that reach a destination, though? It's obviously a serious conversation. And it has been acknowledged, but does it get to any kind of destination?
Yes, baby step is the economic corridor. At the end of the day, yes, now the buffer is Jordan, but at the end of the day, that is a project, a common project that includes Saudi Arabia and Israel. So even if there are, I don't know, we're going to see what kind of deals they're going to happen and what kind of contracts will be signed. But at the end of the day, these are the countries now in the Gulf, in the Middle East, that are connected to each other through a grand project. And there is no other grand project in the region except that links is the Israelis with the Saudis, and then of course with the Abraham Accord, you had the UAE and Bahrain before that. And the fruits of that, we're seeing that Bahrain is getting a security deal with the Americans, and everyone is getting whatever they want. But the big story is, yes, definitely how to see this relation between Israel and the Saudis grow. Definitely, even the Palestinians were on board, because they were like, guys, if this is going to happen, at least let us benefit from it. And then they have demands. But we have to see if the Netanyahu government, which is the most extreme of its history, will be able to give something to the Palestinians. That's to be seen. At the same time, if you are going to go into that that Israel, Saudi, whatever the partnership would be or relations will be, you need to take care of the spoilers. So the spoilers are Iran and the allies of Iran in the region. That's why I guess in parallel there is this appeasement, and there is this whatever it's happening between the Iranians and the Americans, because you don't want to have the deal of the century really between Israel and Saudi Arabia, and then let the spoilers ruin it. So you have to really calm down the spoilers. And that's what's happening, I guess. Whatever it's going to happen between the Iranians and the Americans, you have to read it from that angle, because there is no other opposition in the region to that deal except the Iranians and the allies of Iran.
Well, there is apparently, I mean, not that it's an opposition, but it is a hurdle. Security guarantees from the US, Washington to Saudi Arabia appears to be one of the sort of big conditions.
Look, what we are hearing and seeing and kind of analyzing is like, as you know better than me, like the security of Israel and the survival of Israel is important to the Republicans and the Democrats in the US politics. And therefore, if the price of that is to give the Saudis that security deal, I think it will happen. So we read it from that, because that is really like a strategic, it's about strategic positioning of the US protecting Israel and arriving to this point that Israel now is having deals with not only Jordan and Egypt, but beyond that. And if Saudi Arabia is signing a deal with Israel, that's I guess kind of like the Arab Muslim Sunni world will have like to accept that and accept Israel in the region. So that's big, that's huge, that I don't think like the Republicans or the Democrats will stop it, you know.
Would that translate, just to quickly finish this thought, would it translate into essentially dismissing, removing from the table this general narrative that Saudi and the US are divorcing, because this clearly sounds like a remarriage?
Yes, rearranged marriage, very, very like benefits to all. So they're getting the benefits. The Americans.
Or is it like a good Sunni marriage where there's multiple wives?
No, there is the other one, the Shia marriage.
Oh, that's like, of course. But they can be very short, I understand. We won't go into that conversation.
But it serves the purpose, I guess. Short-lived, but serves the purpose.
Yes, yes. Let's go to the survey question and get the view of the room on Saudi Arabia's production cuts threaten a surge in oil price volatility, which has fallen progressively through 2023 to reach 10-year lows this month. This is a technical question, ultimately. Volatility is what we saw in the oil markets last year and the year before, and obviously allowed oil traders to make a lot of money. When the outlook is that there is a lot of volatility, it means a lot of movement in the oil price, which had calmed down a lot this year. It was 50 average in 2022. It is now down to around 25. But that could change as the tightness continues in the market. So the extension of the cuts will create a surge in oil price volatility. Agree or disagree? Narendra, you started out your earlier comments there, the idea that inevitably we are going into an election year now with the US and also India. India, I think, is even before the US. The election, I believe, is next spring. Is that right? And what is the
next May?
Next May. How does that affect how India's policies are? And we know in America, obviously, nobody likes high gasoline prices during an election cycle. But how do you think it impacts India and India's economic performance over the next cycle?
Well, you see, I mean, if oil is very important. Ours is still an oil economy. You see, and if oil prices are like $80 per barrel, we have managed it so far. Economy is doing very well. In fact, last quarter, our growth was almost in the region, it's about 7%. And we are again the fastest growing large economy in the world, thanks to because oil prices were kind of within the range that we could easily deal with. But if oil prices go, beyond 90 and stay there, then, of course, it's very bad news for us, especially in the election year, because that will mean inflation might go out of control and, transport will become expensive and the manufacturing cost will go up and we will no longer be as competitive as, for instance, we are vis-a-vis, let's say, China or Vietnam and others. So in fact, I can just go on. And we understand, for instance, that's why you see our anger that, we understand if the prices are going up because there is kind of demand supply fundamentals are in play. And that's why we know that, prices are going up, but there is no such thing. I mean, it has nothing to do with economics, nothing to do with demand supply fundamentals, and there is no major geopolitical trigger too. I mean, the markets have already factored in Ukraine. Now, the question is that, then why is it happening? And that too with countries like we perceive to be very close to now are behind it. So now the question is that,
is there a
Saudi Arabia,
consequence? Is there a consequence for Narendra Modi's re-election? I mean, people in America would argue that because of the supposed bad relationship between Saudi and Biden and MBS, that maybe Saudi wants to keep prices up because it'll be a problem for the re-election of Biden. That's a certain view in Washington, whether right or wrong. But ultimately, is there a similar view in India for the consequence for Narendra Modi?
You see, of course, it will create more challenges in the sense that, it may come in the way, for instance, the kind of mandate that the party got in 2019, repeating it. And people may even say, look, I mean, is Saudi Arabia and others, they are playing this game just because they don't like Biden? Don't they, do they have problem with the government in India too? And so on and so forth. So I think so that's why my sense is that, a 90s is unsustainable. I'm talking economics, not politics.
Yeah.
I think unless there is a kind of steady demand, or for China, we don't see any rise in demand. In India, in fact, the last 2 months demand had gone down thanks to monsoon, and we are seeing similar data coming from others. So I don't really understand. It's just being artificially done. Put the whole thing on a steroid. And when you do that, of course, fundamentally some places things can go wrong. So my sense is, very difficult to predict, but my sense is that oil in the 90s is unsustainable. It will go back to the like $80 per barrel in that region. And then, probably things might happen in over a long period of time. This theory that oil will be like $100, $120, we have seen report from Goldman Sachs and many others. I think, and Goldman Sachs and many others have proved to be wrong in the past, and so my own sense is that at the level crude is today is absolutely unsustainable because it has nothing to do with economics and is basically going against the economic interests of the large importers, United States, China, and India, and several others. So I think they will have to reconsider it. OPEC cannot work in isolation. They're not operating on Venus or Mars. They're operating very much on this planet. And so therefore, they have to be sensitive to kind of how they play. And my own sense is Saudi Arabia, Crown Prince MBS, I think very modern leadership. They want to be kind of, want to grow. They want to modernize their economy, but in cooperation with, in sync with economies like India, China, United States, and many others. So I think they probably are testing the market. They're seeing what can be done, also sending a message to being importer. But my own sense is that this level is not sustainable. It will come back to 80, 82, 85, because that's the kind of price that the world as a whole is comfortable with, at least is willing to deal with it. India, $80 per barrel, India can deal with it.
Walter, I mean, just some closing thoughts on where OPEC Plus goes beyond December, because obviously all the cards are on the table now until December. Future sort of output strategy, if you like, beyond the new year. There is a clear tightness. Is that not an opportunity for countries within OPEC Plus to say, listen, we'd like to pump some more because the market wants more, and we've got the idle supply? What's your own sense of where the direction of travel in that conversation goes?
So actually, I'm aligned with the survey question you flashed up there. I think it's the $100 mark. If it goes above $100, and I think that will trigger a reduction in those cuts. I do think the price is slightly higher than ideal for these cuts at present, but I think that we'll live with that where it is for now and see what happens. If it does creep above 100, then I think it's likely there will be a change of direction. But
I mean, Saudi Arabia has said, sorry to interrupt you, Walter. Saudi Arabia has said that even though they've extended till the end of the year, they will review them on a monthly basis.
Yeah, and I think, $100 oil would start to hurt. So I would think they would look at it at that point, maybe slightly before then, but certainly that would seem to be a solid trigger for me for a reversal in that. But what has made a huge difference to the industry is the stability that the OPEC plus cuts have brought to the market. That volatility going away, that certainty around price is really important for an investment. And so I think it generally has been good for the industry, this stepping in and controlling that volatility. Now, whether the price it's been stabilized at is right or wrong is a different question, but getting rid of that volatility is very valuable.
Well, maybe they don't want it to come back. It looks like it may get some momentum. We'll see. Laurie, closing thoughts for you. We didn't mention this situation in Europe, the Ukrainian, the war, the Russia's invasion into Ukraine obviously continues. We're about to go into the winter there. So the window of sort of active fighting seems to play down. We have a story overnight of the Ukrainians attacking a strategic shipyard in the Russian area of Crimea, the Russian annexed area of Crimea. Your thoughts of where all of things related to the Russia's invasion of Ukraine plays into the wider energy story and geopolitical story?
In Europe, so let's say that even in Europe now, everybody's getting ready for the elections and for a new European leadership. But I guess the story goes that, yes, the EU...
Which election, sorry, in particular?
The European elections. So to elect a new commission and to have...
Okay.
Yeah, so let's see what kind of European leadership we're going to have and which direction they will take. So that will come next year. So we're in that mood as well. But to say that to go into the winter, as we all know, that they're getting ready, those storage capacities almost full before time, 90% even before time. But everybody knows that they need to be very careful. And these news about Chinese buying all these LNG or all these cargoes that they are already paying for, etc., and even in the spot market, all of that makes Europe a bit edgy and wishing that they will have again a mild winter, but again wishing that, and I guess we will start again hearing the enforcement of the idea to consume less and be more efficient in our consumption, because this is basically what saved Europe last winter, a mild winter. They were kind of with they were efficient enough that the consumption was going down, and then of course China was closed. So today China is not closed. It is attracting LNG, wants more LNG, and if Asia wants more LNG, what will happen if the winter is very cold here? I think this is what we are going through in it. But the
other thing last year close out.
No, I was saying yesterday message from Ursula von der Leyen was very clear. We are going to continue with our green projects and Green Deal, and we are going to be more efficient in energy and other things that we can later discuss about, industry competitiveness vis-a-vis China, vis-a-vis the US and the rest of the world. But the world is de-risking and not decoupling with China, which is, I guess, the trend going forward. And I guess this is everywhere. My last word is even for us in the Middle East, I think the trend now is more economic connectivity, less of political bickering. Those who want that will be on board of mega projects. Those who want to stay in the political and historical bickering, they will lose the opportunity of these mega economic projects.
Interesting. Hold on to your old sort of legacy divisions and you will be left behind. Interesting. Let's close it out there. Brent crude oil trading at 92.50, solidly in the 90s. I'm afraid, Narendra, tough to see it dropping unless we see some fairly substantial, further negative headlines, perhaps out of China. Where does the momentum come to push these things down, push oil down? It's hard to identify what they are. Walter Simpson in Oman, thank you so much for joining us today. Great to have all of you back on the show. Laurie Hatayan in Belgium and Narendra Taneja in India. Thank you all so very much, and look forward to catching up with everybody 10:30 UAE time each morning. All the best. Thank you.
Thank you.
Thank you very much.
Masalama. All the best.
Thank you.